Okay, everybody, it is me, Gregory Mannarino, post-market wrap-up on this lovely, every day is lovely, you know that. Lovely Monday, April 10th, 2023. I'm laughing, but this whole thing is just a complete, it's just out of control. I want to use some other language, but I don't think YouTube would appreciate that too much here. Before I get going here, I have pages of stuff I want to talk to you all about. Um, let's just take a gander over at this market here. Nothing. Okay. Dow Jones Industrial Average, S&P 500, Nasdaq flat, relatively flat. We're going into earnings season here. Uh, I don't really freaking give a damn what earnings are. It doesn't matter anymore. Look, earnings, forward guidance, PE ratios, all stuff that's supposed to matter in a real market. We don't have a real market. Doesn't matter anymore. When you have a situation like this, and it's a very interesting situation. I want to define this here, or at least try to put a perspective on it. Let's do that actually. So we found out today. These are some of the headlines. It's kind of epic here. So it turns out that U.S. banks, the big institutions here, um, they are now they're not lending, basically, is what it comes down to. Lending activity has cratered to a record low. At the same time, these same institutions are getting crazy amounts of inflows out of the smaller banks, which are being systematically erased. What's really happening here? We've covered this over the last few months here. What do we know? I always love to say, what do we know? It's very simple. You and I know for a fact that inflation continues to rise. With that, I want to read this to you. Where the hell did I put it here? This is Yahoo Finance. Two headlines that were kind of interesting. You're gonna laugh. Make this stuff up. U.S. consumer prices remain high. Duh. Okay. And elevated was the word. U.S. consumer prices remain elevated. Really? Oh, I didn't notice. How about you? And another headline, again, this is Yahoo Finance here. The bond market is signaling a deep, their words, not Greg Mannarino's, not yours, not anybody else, a deep recession. Let's see. How about we have a yield curve that is the most inverted that we've ever seen in history? Go back on history. Look at every single time, without exception, that we've seen this kind of action. It leads into a very deep recession, depression. But what was it? Jamie Dimon? Oh, yeah. Jamie Dimon said, oh, don't worry. Don't you dare worry about a recession, people, or anything else. He wants you to go to his bank and go borrow and then borrow some more and go out and spend and spend and spend. Okay, they can't let you know the truth. Duh. I think we all know that here. But the situation is very simple to understand. We have a very interesting balancing act going on here. What with the Federal Reserve, especially here, and central banks around the world. What am I talking about? They're they're in here keeping rates suppressed. The 10-year yield remaining stable. You know the situation. We've been talking about it since forever. Okay, if they can maintain that illusion of stability, the stock market's going up. So what the Fed is doing here, again, pumping cash into the market. They've been doing this ever since the this banking crisis, which is we're still in a consolidation period. Oh no, we can't say consolidation. Remember that. Can't say consolidation. It's an integration. It's not a consolidation. It's an integration. You got to use the right wording here. Okay, so this is going on here. Massive inflows, deposit inflows from the small banks into the large banks who are now not lending anymore. So the bottom line is what's happening here is the Fed, central bank are pushing just enough liquidity into the debt market to foster that illusion of stability. All right. You and I kind of knew this was coming from a long time ago. While at the same time, they're lessening the availability of credit to small businesses and consumers. Do you see the game that they're playing here? So keeping the market liquefied or fostering that illusion of some type of liquidity in the debt market, which is it's drying up here. Don't listen to Greg Mannarino on this, okay? You got people crawling out of the woodwork all over the place on the mainstream, multi-billionaire investor hedge fund managers saying exactly what I've been explaining and we've discussed here repeatedly over and over again. Liquidity is drying up. Liquidity is drying up. Credit crisis, debt crisis, blah, 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 crisis, crisis, crisis. But again, look at the scenario here. Central banks just enough liquidity into the debt market to make it look stable, keeping rates suppressed. Meanwhile, they got the big banks, obviously, in their back pocket. The central banks, the big banks actually run the Fed. I think that's pretty evident here. And they are massively cutting back on lending. This is the real reason why. Okay, I think you all know where I'm going with this. At least I hope so. The real reason why central banks have been raising rates. It has nothing, never ever since day one. And you know that if you've been with me, Lava Girl's been with me forever. A lot of you right here have been with me for a long time. Understand, and we discussed it here. We laughed our rear ends off when we heard that the Fed's in a fight. They're fighting, central banks, they're fighting, they're raising rates. They're raising rates because they're limiting the availability of credit to consumers and small businesses. Why? To fulfill the corporate agenda, to erase whatever's left of small businesses around the world. You know, they shut the economy down. You remember all that COVID? Okay, they did that so they could kill small businesses in record amounts. Now, since it didn't succeed in eliminating all of them, now they're lessening the availability of credit. And with regard to consumers, same thing. Okay, what are they doing here? Two-tier society. As you and I have discussed, new feudal system since time immemorial. We've discussed this here, and it's right in our freaking face, people. Going back to the market real quick because I didn't finish. So stocks did nothing. The major indices did nothing. Bitcoin, over 29,000. Crypto, looking real pretty to Greg Mannarino. Thank you, Mitch. Gold and silver falling under pressure here, but you need to be there as well. Crude oil fell about 1% today. Okay, you know how I feel about energy. You know how I feel about commodities. Nothing is going to make me change my mind here, people. You know the scenario. You know how it's going to work. Cash is just going to move from one set of assets into another at one particular time. Set yourself up for what's coming down the pike here. And that's not going to change. A debt market implosion. Look, this is what they're doing. Central banks collectively are doing the same things, just a coincidence, at the same time. All right. Again, feeding the market with just enough liquidity, if you want to call it that, to foster that illusion of stability in the debt market. Okay. That's why the stock market is detached, absolutely detached from reality. There's no connection at all between what the economy is doing and the market. This just doesn't exist anymore. There's no price discovery mechanism. You all know this, okay? And at the same time, they're limiting the availability of credit. That's the real reason why central banks are raising rates. But do you think our brain dead president or some other world leader, Christine Lagarde or whoever's going to tell you about these kinds of things? How about no? Neither will a Fed president. You know, the goal. Oh no, I had a relapse. I really had a freaking relapse. Lex Luthor, the psychopath from hell, yelling, hey, look, I'm yelling. I started yelling. The inflation's gonna be temporary. Oh yeah, make it up. I'm starting to sweat. Anyway, so another thing I want you to, there's something else going on here that you all need to be aware of, and it's going to be no surprise to you. How many of you recall the meltdown, the big meltdown, 2008, when we had, the first round of quantitative easing, and soon as they started easing off on that, what did they do? Quantitative easing 2. And when they started easing off on quantitative 2, the market started to come down. Thank you, John. What happened? They instituted Operation Twist, selling long bonds and then short bonds and twisting them around and then reversing that. Well, that's what's happening right now. There is a new version of Operation Twist going on. So central banks are here. I actually was writing this down here. They're selling their longer-term debt, and I'm sorry, they're selling short-term debt, buying long-term debt. It's basically an Operation Twist. Again, imagine my surprise here. You can't make this stuff up, people. And here's something else that's kind of interesting, and you can take this however you want. 39% of Americans are skipping meals, according to what they're saying. Probably 39% need to skip meals, honestly. And this, but look, it's not a matter of people eating too much. All right. I know a lot of you are going to say people should skip meals. 39% of Americans are skipping meals to make payments on housing here. The fact of the matter is, it's not really people are getting fat, bloated, sick, and suffering from every other medical condition you can think about on the face of the earth. Take that from someone who practiced medicine for 20 freaking years. I think I know what I'm talking about, because the food is poison. The food is poison. They wouldn't feed this to a subway rat, but they're feeding it to you and they're feeding it to me. And that's making people sick. Diabetes, hypertension, everything that you can think about on the face of the freaking earth. Kidney failure, strokes, heart disease, everything. It's out of control. But again, that's what they're saying. But we're doing great. Our economy is booming and we're so strong. What is it? 61%. Last time I checked, it was 61% of people here in America, and I'm sure this is a phenomenon around the world, are living paycheck to paycheck. Paycheck to paycheck. How is that a booming society? How is that a successful society? People are stressed out. They're told to look here when they should be looking in the direction where all this other crap is going on in the background. You can't make this stuff up. Again, I'm not done, people, so just bear with me. I want to talk about something else here, and I'm getting a lot of questions about this, so I want to address it here. And there's a lot of talk about this on the mainstream, so that's maybe why I should talk about it. Everyone's concerned that the new black swan event is going to be this commercial real estate implosion. And I'm here to tell you it's not going to be. That's the shock. How do I know? How do you know that the commercial real estate meltdown that everyone is predicting is going to wipe everything up? Because they're telling you where to look. Whenever you can point, people take this away from this blog right now, from this particular video. Whenever you can point at a particular event that may be unfolding or may be soon to unfold, and people are telling you that this is it, this is the one that's going to bring down the entire system, you know it's not it. So laugh. Again, look back on every single so-called crisis that has been told to you. This doesn't work. Okay, when people know where it's coming from, it generally isn't it. 9 times out of 10, it's not it. So I'm not saying that this is not an issue. It is an issue here. But what are they going to do? Do you think they're going to allow the system to freaking melt down on the back of a corporate real estate implosion here? No, I don't think so. It's going to be more of the same, more pumping cash in the system, any way they can create inflation. What do central banks want to do? People, you see, I know you. I know all of you. Like I said, some of you have been with me for 1,000 freaking years here. It seems like 1,000 freaking years here. We have a handle on what's going on here. We know exactly what's going on. We know who the enemy is here, period. Anyway, what else can I tell you here? Yeah, we need Yahoo to tell us that prices remain elevated. Yeah, it's just too stupid. Tide Pod time. Yeah, let's eat some Tide Pods and we'll all be doing well here. Let me see what else people is going on that I wanted to talk to you about. I think we covered all of it. Look, central banks are going to inflate. That's basically what I was leading to here. The number one job of a central bank is to inflate or die. And central banks will survive at all costs. They don't care if you die, I die, our kids die, dogs die, cats die, monkeys die. Well, they don't care about any of that. All right. All they care about is their own survival and how they're literally taking over the entire world at this point here. And make no mistake, what we're seeing here with the lessening of credit, the credit availability becoming less, available to the consumer, to U.S. small businesses here. And look, what's the first domino here to fall? It's the smaller and regional banks, and they need this. Why do they need this? To consolidate the banking system so they can roll out. I really feel, honestly, now with Fed now and what's going on here, it's going to take a while, okay? I don't want you to think that this is going to be like tomorrow, but all the pieces are in place right now for the Federal Reserve, for central banks to literally start to really think about when. I think they already have it planned out when they're going to implement their new system, but they have to bring down this system first. You understand? And this is why you're seeing the lack of credit availability to small businesses, the consumers in general. Inflation is going to get much, much, much worse here. Okay. Energy getting a bit higher as of late. That's going to bleed off into everything as well. And central banks pumping the system here. Oh, yeah, the balance sheet fell by $100 billion. If they just pumped $500 billion into it. Oh, well, thank you. Should I get on my knees and thank the Federal Reserve for doing that? Do you think it's going to really stop? Do you honestly believe? I showed you that chart. I don't even know where it is anymore. I think I threw it out. The hockey stick here with here. Do you think this is going to stop? You think this is over? Honestly, you think just because maybe we fell a fraction here at the top that this is it's over. It's going to be great now. Oh, how about no? How about no? I think you're all well aware of that. I mean, come on, people. It's insane. It really is. And I got people to tell me that, oh, Greg, you're wrong. The Fed's balance sheet shrunk $101 billion in the past week. Duh. Oh, that means everything's going to be better. Really? Honestly? Thank you, Indy. Honestly. I can't handle it. I can't freaking handle it. Drooling on myself over here. Getting all kinds of bent out of shape. Anyway, people, look. Yeah, absolutely not. Counterparty risk. Look, you all got it. You all got it down. And I love that. I really, really do. So before I go, Lava Girl, thank you. This Lava Girl, I got to give her the biggest shout out here. People, look, let's do this here. For me and for Lava Girl, I got 1,683 people watching. I got 414 thumbs up. I did the ghoul face for you, and I got 416 thumbs up. Can we do something about that, people? Honestly, look, I do appreciate it when you thumbs up these videos here. I more so appreciate it when you comment, when you share this stuff, when you get it out there. Axiom Curb, nice interview we did today. I can't wait to see that. Yeah, that would be nice if we hit 1,000 thumbs up here. Anyway, yeah, it's a boomerang. It's some freaking thing over there. I'm just looking at some of these comments here. The earth is flat. Congratulations. Yellenstein. Yeah, absolutely. Yeah, Kiwi forever there too. People, I think we got it covered here. We know what we're doing. We're not going to deviate. That's the beauty of this. If you notice, the one thing that we never deviated from is betting against the debt, become our own central bank, holding hard assets, gold, silver, my favorite of all time, silver, my favorite of all time here. Understanding that commodities, in my view, and please do your own research on this, is the place to be moving forward. The illusion of stability is being maintained in this debt market. It's an incredible thing. An enormous amount of effort is being put in by central banks to foster that illusion of stability. And we'll see, like I was saying earlier, we got earnings coming out, but it doesn't matter to me. It doesn't matter. When you have that illusion of stability in the debt market, I mean, there's no price discovery. Like we talked about a million times, in a normal market, there are buyers and sellers. And these buyers and sellers try to agree, okay, I will buy this from you if you will sell it to me at this price. No, I want more. And they agree, and that's how you get a price discovery. But when you have this third party, this massive, disgusting, vomitous thing, central banks in here in the market rigging it all, you can't have a real market at all. A real economy, zero, absolutely nothing. And I think Goulstein, never heard that one before. Anyway, people, look, like I said, we got this down. We got each other, and I think that's so important. What's my opinion of XRP? What do you think my opinion of XRP is? I've been talking about it for a very long time. I think it's a good place to be. It's kind of hard to get right now, but I think all of these things are going to make multiples on your investment moving forward. But look, don't put a dollar, a dime, anything in any asset or any asset class or a company. Thank you, Jane. Without really knowing what you're doing and why you're doing it. Why does Greg Mannarino like cryptocurrencies? A lot of people despise this stuff. Why do I like it? Because I believe that at one point we are going to get a large movement of cash out of the debt market, out of the stock market, and it's going to just look for places to go. And in my opinion, this is my opinion, okay, it's going to go into commodities and it's going to make its way into cryptocurrencies as well. And as I discussed earlier today with my friends over Axiom, I don't see a threat to cryptocurrencies from a central bank digital currency. It's a completely different animal, completely different thing. It may sound the same, but people are hoarding and hodling, whatever the word is, cryptocurrencies. Meanwhile, the Fed's going to take advantage of that, along with other central banks, because that's what they're going to use for transaction. You understand? People aren't really transacting in cryptocurrencies; they're hoarding them, believing that down the line they're going to be worth a lot more. You understand? And this is why you're seeing these massive gyrations in the price, incredible swings. It's a new asset class too. For those of us who understand cryptocurrencies, at least to a certain degree, you have to realize, thank you, Rhonda, this is a relatively new, in the grand scheme of things, asset class. So it's going to take a while for it to, I don't know. It's probably never going to make mainstream. And I don't think, as a matter of fact, I mean, you look at the crypto market cap, they've gotten decimated. The market capitalization of crypto has been decimated. And I'm not going to give any more secrets away because my interview with Axiom, we covered a lot of this stuff. So I'm going to shut my mouth. All right, people, look, this guy here loves you a lot from the heart. I mean that, all of you, not just Lava Girl. And I will see all of you in the morning, and we will again address the lovely festivities. Thank you, Tuyen. Dang, I probably messed up your name. I can't even say my own name sometimes. All right. I'll see you in the morning. Okay. Take care.